All right, what is up, traders? What's up, tycoons? Super excited for today's video. I feel like a lot of people got trapped today, right, on the initial gap down in the market and just weren't ready for this absolute rip to the upside that we experienced today. So I'm going to break down how you guys could have potentially prevented yourselves from overly aggressively shorting right here. And it's got a lot to do with gamma. Okay, and this is something that I've been covering more and more on the channel. We'll break it down in further detail, but it's got a lot to do with the put wall and where the put wall was for today. Now, another thing that I want to bring to your attention is energy. Again, one of the top performing sectors. Okay. And this is something that I've been talking about on YouTube. I've been talking about in the Discord for weeks. And VLO is one of the names that we got into. Okay, this is the name I got into. This is an energy play. Call options are up over 200% on this one. I mean, look at that absolute beautiful breakout. We'll break that down in more detail. We'll take a look at the XLE sector as a whole, and then we'll take a look at another one of the plays that we went over in the Discord, crack. Okay, this was a good hit of crack right here, and sometimes it's good to buy some crack, okay? All right, now there's also something very important I want to bring to your attention. Okay, this is the EQRR ETF. I'll explain what that is, why this breakout could potentially be so important, and do that by comparing it to the 10-year Treasury yield and really just wrapping up a lot of things, summarizing and concluding on that topic for today's video. So it's going to be a really good one. Be sure to smash the like button, subscribe to the channel if you guys are new. But as always, the content provided on this channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance and trading content. I also try to sprinkle in a free trade idea in there every single week. And I've been talking about for the past 2 weeks energy and this rotation in energy that we're seeing. So, if you've been keeping up with the newsletter, 2 weeks ago we were talking about it, and now we're seeing a lot of the follow through, from energy. Okay, now there is a website associated with it, and remember, it's completely free, so you guys can just check out the website, read some of the articles, right? You can check out some of the previous articles or try to stay up to date whenever new ones are posted. Or if it's something you want sent directly to your email, you can sign up using those links in the description. And you can also join the Investment Intelligence Discord. That's only $10 a month. That's where you get access to all my different analysis, all my different trade ideas, custom scripts, indicators, valuable resources, such as being able to see dark pool and gamma levels. The same gamma levels we're going to go over in today's video were pulled from the Discord. Okay. These are what some of the trade ideas will look like. I'll show you guys the charts, highlight the patterns that I'm looking at. Okay, many of these have worked out very, very well. And I tried to, go over, where you want to be long above or where you want to be short below and kind of, some areas where you want to have some stop losses as well. That way you can manage your risk and have a little bit of some targets. Okay, now let's get into today's video. And this is the S&P 500 SPY ETF on a 5-minute time frame, so you guys can really see the intraday action. Okay, now we do have some Fibonacci's on here. Okay, these are the fibs from the all-time highs, okay, down to our most recent lows. And we're above the 61.8% Fibonacci level. Now, when you're able to trade above here, the odds, okay, of you getting a 100% retracement, well, those greatly increase, right? So from today's price action, where we broke out above, retested that level, and pushed up higher, we do look good for a potential retracement back up to the 518 area. Now, of course, binary events can toss technical analysis out of the window. And we've got Jerome Powell and the Fed meeting, FOMC, happening very, 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 very soon, okay, depending on what time you're watching this video. So we want to just keep an open mind to all possibilities, but what we really want to do is break down today's price action in particular. Now, you see this here says zero gamma, this says put wall, and this says call wall. Okay, we'll break that down. But you can access this information in the Discord. And so when you look at today's expiration date, all right, and you take a look, the put wall was at 511, the call wall was at 520, and the zero gamma level was at 512.5. Okay, so that's where we get these from. Put wall here is at 511, zero gamma is at 512, and the call wall is at 520. Now, if you're not familiar with gamma levels, call wall, zero gamma, put walls, I'm going to break it down very simply and very quickly, okay, not to get things overcomplicated. A call wall is going to be an area that is extremely, extremely tough resistance. This means that anytime you come up to this area, there is a high percentage odds that you're going to see lots of sellers, okay? And it's not necessarily bearish sellers. Oftentimes, it's people taking profit, Okay, and what you see is a lot of profit taking. All right. Now there's the possibility for a gamma squeeze whenever you're able to sustain above that 520 level. Oftentimes, market makers, if people are still holding those option contracts at that 520 strike expiration, well, then they're forced to hedge. And in this case, they would be forced to buy shares to hedge, trading above the call wall. Right. Now, the put wall, right, is going to be very similar to the call wall, except it's going to be support. This is going to be extremely strong support. Very, 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 very strong support. And anytime you trade below there, you face the potential for, a kind of a gamma squeeze to the downside, right? Where now if we're trading below 511, and we're holding that level and people have not taken profit on their put options, well, then market makers are going to hedge themselves and they're going to be selling a lot of shares. Okay. And so if you notice today, we came very, very close to that 511 level. And then we basically put in a double bottom, broke through the neckline here, which also happened to be our 38.2% Fibonacci. And once we got above the zero gamma level, you see we really had no pullbacks for the rest of the day. Now, why is the zero gamma level important? Well, because above the zero gamma level, you're in positive gamma territory, meaning that the option flows and the option chain is going to be a little bit more in your favor and potentially help you to the upside. Okay. Price action, that is, not necessarily you as a person or trader. And when you're below the zero gamma level, well, then the opposite is going to be in effect. Now you're in negative gamma territory, and you're going to be potentially drawn towards the put wall. Okay. These put walls and these call walls, they can often act as magnets. Okay. And so we can see that, price action was drawn like a magnet towards the put wall, but it was not able to break through 511. And as soon as we got above our zero gamma level, okay, and broke above our double bottom neckline right here, we really just moved up, consolidated, right? And then we moved up, consolidated again, and then we broke out right there towards the end of the day. Now we are approaching a trend line that we've tested many times, right? We tested it once over here, twice, 3, 4, 5 times. Oftentimes they say the more times you test a trend line, the weaker it's going to get. So if we were to test this for a sixth time, the big question is, will we reject once again and potentially come back down to this 514.5 area? Or can we potentially finally get a breakout and come back up towards that 100% retracement? Okay. Now there is going to be some overhead supply here. All right. If we were to just draw in a little supply box right here. All right, this is going to be your overhead supply where, there's potentially trapped buyers here who are looking to get out at break even. But above there, we know that the call wall is 520. Okay. And we know that price action is potentially going to act like a magnet towards that 520 area above 518. But we also know, okay, once again, that this is a very big area of resistance. It's going to be very hard for buyers to push above that area and really hold above 520. In the case that it does happen, oftentimes we'll see a gamma squeeze where you'll see the SPY move $1, $2, $3 in a very quick fashion, right? In a very, very quick and rapid motion. So that's basically the TA for the SPY, okay, heading into FOMC. These are really the key levels that I'm looking for. Sometimes these gamma levels can change day to day, and also it really determines by your expiration date, right? So if you're someone who's a swing trader and you're looking to swing trade a couple weeks out or even just a couple days out, well, you may want to check the gamma levels for the exact dates on the option chain that you're actually looking to potentially sell your position, right? Or swing your position through. Okay. The call wall is not going to be the same for 0 DTE expirations as it is for expirations that are 1, 2, 3 months out. All right. Sometimes it may happen, but that's another thing to consider, right? Is what are your time frames? Are you a day trader? Are you a swing trader? Are you trying to understand, what's happening on an intraday basis? If you are, you really want to understand these gamma levels. They're really going to help you out a lot. And you can pull it up in the Discord very easily just by using the gamma command. And it will pull this chart up right here for you, right? For a specific ticker, for a specific expiration date that you're looking at. And so maybe you don't trade the SPY, maybe you trade the Qs, or maybe you trade IWM. Or maybe you're someone who really just trades NVIDIA right now, or Palantir, or some of those other popular AI stocks, right? This is something that potentially can help give you an edge in the market. It's not something that's going to make you rich, but overall, when it comes to finding an edge, It's very hard to find an edge, and these are one of the, many resources in the Discord that potentially can help you find an edge. Now, as I mentioned before, we see here that energy, again, is the leading performer when it comes to sectors, right? And, I don't want to beat a dead horse. We've been talking about energy, in the newsletter for the past few weeks. I've been talking about VLO. I think I got in VLO like 3 or 4 weeks ago. Um, and it's finally paying off. And we just hit our first bullish price target today of 166.5. Now, this is an individual energy name, right? There's different ways to play markets. But what I like to do is I like to look for leaders. Okay. And so rather than trying to chase some of the laggards and say, oh, well, this one's been underperforming, maybe I can catch a catch-up trade. The energy sector as a whole wasn't really outperforming at the moment when I was looking at these names. But I was saying, hey, if we are starting to see a bottom in energy, I want to look for the leaders, right? And VLO was one of those leaders. And that trade has worked out very, very well, right? You can see the call options are up over 200%. And they still have plenty of time on the expiration date to continue holding if we see a sustained rally in VLO. Now, this is the XLE itself. So, this is a weekly chart right here. And so when I talk about, getting into it, Valero, like 3, 4 weeks ago, this is one weekly candle. This is another one. This is right here. So I'm seeing it and I'm saying, hey, we're potentially forming a bottom here. And if energy can break out above 88, I want to be long some energy names. And so I jumped the gun a little bit before the sector as a whole, started breaking out. But we were seeing lots of signs, whether it comes to relative performance via ratio charts and different things like that. And we're really just seeing a lot of follow through when it comes to the XLE itself, right? Last week was a very strong weekly candlestick. And today we're pushing up above last week's close. We'll see if energy can potentially come up to the 93.74/94.67 previous highs, right? Those are going to be some of the short-term targets for the XLE if we were to continue this breakout. Now, it doesn't have to continue, okay? We could see a pullback and a move up. But it's really just important to understand, some of the rotations that you're seeing, right? The previous 2 weeks, we've seen semiconductors actually lagging relative to the rest of the market and underperforming, right? If you look at something like the SMH ETF. And then, last week, what was the top performer? It was energy. What was the worst performer last week? It was semiconductors. And so if you spot some of these market rotations, it can really help potentially give you an edge, right? It's not something that you're always going to get 100% right. But when it comes to, factoring things in, these are some of the things that I like to factor in. Now, before we move on to the next chart, I do want to highlight how many times we've tested this overhead supply, right? I've highlighted it via the arrows, but we've got 1, 2, 3, 4 times. The more times you test the level, guys, the weaker it's going to get. So now the question is, do we come up here a 5th time and reject and head back lower? Or, is all of the supply relinquished, right? Are the same sellers that were present all 4 times previously here, are those sellers still present in the market? Did they replace their sell orders that got filled? Are there still more sell orders than buy orders? If not, then potentially we could see XLE break out and head up to the 102.84 area, which is why I got a little bit of time on my contracts just in case we see a really sustained breakout in energy that lasts more than just 1 week. Maybe it lasts a few weeks or potentially even a couple months. Now, crack is another one here. This is an oil refiners ETF. So there's always going to be subsectors within a sector. Okay. And you can take a look. And as I mentioned before, I want to look at the leaders, right? And when you look at the crack ETF, it looks way different than the XLE ETF. This chart is a little more zoomed in here. But you take a look at this one. I mean, this one was looking very strong. Again, tested overhead supply 3 times, was able to break out, and is just shy of its bullish price target here of 38.44. This is a huge multi-year base right here, going all the way back to 2018 to 2024. And the larger the base, the larger the rip in your face. And so it's very possible that we could see even a sustained rally in something like crack, unless this is a false move, right? A false breakout to the upside, in which case you would look for a false move to lead to a fast move to the downside, right? If this was a false breakout, you would look for a fast reversal to the downside. But if this is a true breakout, then it's very possible that we could really see this thing rally or just at least continue an uptrend on a much longer term time horizon, being the significant length of this large base that we've got here. Now, this is the EQRR ETF. This is the Equities for Rising Rates ETF. Now, why is this ETF even invented? Well, it's invented and was created for a rising rate environment. Right now, we already know that the Fed funds rate is already elevated, right? And the odds of the Fed increasing and rising the Fed funds rate even more is relatively low. Okay, it's not 100% guaranteed, but we're pretty much looking at pause or cut in the future, right? This is more so focused on treasury rates and treasury yields. Okay. And we see this thing breaking out here going parabolic. Again, you see it tested overhead supply 4 or 5 times, breakout, nice base, right? You see a lot of these patterns that I'm looking at. We're seeing a large base with overhead supply that's been tested multiple times. And then you see these very strong parabolic moves, right? Huge base, overhead supply tested multiple times, very strong breakout. You know, huge base right here, a little bit of an ascending triangle, bullish pattern. We haven't gotten the breakout yet in XLE, but again, these are the type of charts that I like to buy, right? When you take a look at VLO, VLO looks very similar to what XLE looks like right now, except the breakout has already happened in VLO. So could potentially we see the breakout in XLE like we've seen in VLO, like we're seeing in crack, and like we've seen in EQRR? Well, that's to be determined, okay? But these are nice patterns that I really like to look for. Now, back to the main focus. Is the market trying to tell us right ahead of FOMC, right? Weeks before FOMC, we see this thing breaking out. Is the market trying to tell us that, hey, rate cuts could actually get postponed? Or is it trying to tell us that, hey, maybe inflation actually starts coming in a little bit hotter over the coming months, right? Remember, CPI is a lagging indicator. So let's say we see energy spike right now this month for the rest of the month, okay? That's not going to show up in the inflation report for a whole nother month, all right? And if so, let's say perhaps energy continues to rally for 2 months. Well, that's not going to show up for another 3 months, right? And 4 months in the coming 3 and 4 months inflation reports. And guess what's in 3 and 4 months? June. And guess when the market is anticipating Fed rate cuts? June. So I say all this to say that, energy looks strong, right? Energy, yes, they take out, energy and core CPI and things like that, but energy oftentimes spills over into other components of CPI because higher energy costs lead to higher transportation costs, which end up leading to higher cost of goods or services being provided to the consumer. So, maybe right here, EQRR is telling us something. And if you take a look, EQRR follows the 10-year treasury yield very, very well. And what do we see? Well, we see the EQRR in white here has broken out here clearly. Meanwhile, the 10-year treasury rate via TNX, which is this red line here, it's retesting its previous highs. It has not actually broken out yet. So could this potentially be a leading indicator suggesting that, hey, maybe energy continues to rally, or maybe we actually see a breakout in the treasury yields and we actually start to see the 10-year yield, maybe the 20-year yield, maybe the 2-year yield, whatever it is, maybe we start to see some of these rates go higher. Okay. And that's where I wanted to close the video out on, is really just talk to you guys about the, what's going on in the market on a day-to-day basis, how to understand some of the day-to-day price action in the SPY, especially using gamma levels. It's very, very helpful and useful. Go over the market rotation that we've been seeing into energy. We continue to see that again today after we saw it last week. And then go over the rising rates ETF and how it's suggesting that we're heading into a rising rates environment. While it's unlikely that the Fed itself is actually going to raise the Fed funds rate, one thing that we can consider is the fact that we may see rising rates in treasury yields. So hopefully you guys enjoyed today's video and summary. If you did, smash that like button, subscribe to the channel. Don't forget, you can sign up to the Discord, get access to all the different analysis, all the different trade ideas, for only $10 a month inside of there. And if you want to sign up for the newsletter, that's completely free, right? So it doesn't cost you anything. You can check out the website and just monitor it via the website. Or if it's something that you want sent directly to your inbox, feel free to sign up for that using the link in the description. And if you enjoyed today's analysis and you've got a bunch of questions, or maybe you want to go over some of my day trading dynamics or swing trading strategies, use my Ko-Fi page. Okay, there's a link in the description for that. You click on the commissions tab there, and in there you can book a 30-minute or a 1-hour coaching session. All Discord members do get 20% off of the coaching sessions, so I know they appreciate that. You can also request a specific YouTube video on a topic of your choice. Leave me a nice little detailed message covering the topic and what exactly details you want me to go over inside of the video, so that way I can prepare something for you. And they also have this really cool buy a coffee button. It's basically a way to leave a tip or donation for all the free valuable content I do put out there, such as these YouTube videos and such as the newsletter that I put out as well. So thanks again for watching, guys. And if you enjoyed today's video, most likely you're going to enjoy this next video right here as well. So be sure to click on that one.